Good morning. My name is Scott Redler, Chief Strategic Officer at TWTR.com. Welcome to today's morning call. It is Thursday and kind of quiet overnight session. You know, if you look to overseas to try and get some kind of direction, there's not really much. Recently, Europe's been very strong, and Draghi came out and said, okay, we're going to continue to stimulate and we're going to be accommodative. And, you know, at this point, the European markets didn't really react to it because it was somewhat priced in. You know, if you look at the chart of the HEDJ, which is a proxy for Germany with a dollar hedge, you'll see that, you know, like most markets, it had its double bottom and it's had a really nice move back into some type of resistance. At this point, there was that extra trade when it took out the resistance right here, and now it's kind of trying to prove it can go higher and hold this elevated level. At this point, you know, I would have to probably say that the jury's out, right, because of the size of the move. And the fast and the speed has slowed. So if you want to draw a trend to figure out if this trend could still stay intact and show this, you know, because this is actually in its active trend still, as long as the HEDJ stays above this 61-ish area, I would say Europe's very constructive. If it were to break below this, chances are, you know, it wouldn't be a tailwind and, you know, it might become a little bit, not of a concern, but it just might pull back. Because look at the size of the move from 52 to almost 62, you know, can we hold higher or do we, you know, come in and hit the 21-day like the S&P has? You know, you go to, you know, our markets in the SPX and it's kind of tricky right now. It's a very tricky spot because you had your, you know, your fast and furious move, right? Here was, first of all, when the range broke late August, okay, where that's when the volatility picked up below all the moving averages. Then you had your low and your first quick bounce to then retest that low to give you that red dog reversal. Then the market said, okay, we're confirming that with a close above this lower pivot. And then fast forward, it took out this resistance right here and retested it. And then we were above the 8-day for a decent amount of time. And then look what happened right here. It broke. Okay, we talked about the 8-day moving average. The 8-day moving average broke around 2,090. So that means the speed changed. So you go look at what happens here when the speed changes. Some guys got short or reduced risk if you were trading this along the 8-day moving average. So now, you know, you broaden out this a bit. So you want to figure out step by step, so to speak. So let's do that. And you have a small floor right here. Okay, so here is 2000. This was 2068. Okay, what was Tuesday? 2000. What was this? A little bit higher, 2069. And then yesterday we closed on our lows with 2074. So basically a 6-handle range. So the question now is, does this hold or do we retrace a little bit further and see like maybe 2043? At this point, we don't know. Except this accelerated trend is broken. You know, at this point I reduced risk. I know I had 4 longs into yesterday, but then sold when it couldn't hold above the prior high here of 283. And now we'll figure out what's next. You can't rule out a move, you know, a move lower, okay, or at least to retrace more. We talked about Fibonacci retracement rules, and you go to the low here, you know, up until the peak, and right now we're still, you know, only at, what is this? We go like this. The 25% retracement is still lower, okay. That's still, if I'm a little blind here, that's 2054. Okay, so with that being said, you can even get to the 0.382, which is all the way down here, and still be deemed strong. So you just don't want to get caught, you know, what's it called, buying too quickly if, you know, you have a very active time horizon. So yesterday, one of the reasons why we were reversed was because of the news from Macy's, right? The news from retail, the news that, you know, the shelves are stocked and nothing's moving. And also, I think it just reiterates the trend we've been in. No one goes and shops in a lot of these bulge bracket stores anymore. Everyone orders from Amazon. You look at the XRT, okay, which is a big ETF for retail, and look at that chart, okay? Where is the 200-day, guys? 200-day is right here. Is it below or above? It's below. So that shows you weakness, okay? And it broke below here. You did get a little bit of a bounce back like everything else, but now look how quickly, you know, this is back down into, you know, resistance, whereas, you know, you have it below all moving averages, and this is a sector that if it breaks this spot, you know, that could be next. And you know, I don't know if it's going to be a full headwind for the market because I think people know already this is a weak sector, but we shall see. And everyone's like, oh, how did this happen in Macy's? Oh, my goodness. What do you mean, how did this happen? Macy's has been below the 200-day since it broke its trend here at 65. You have no reason to be this as an investor or even an active trader. The active traders probably got rid of it when it broke the 8 and 21 day there. And now look at it, in the absolute doghouse. Okay, go to the same thing with Walmart. Walmart's been below the 200-day for a very long time as well. So what's the rules as a trader? If it's below the 8 and 21 day, which it was right here, you get out because there's no momentum. And if you're an investor and it gets below the 200-day and stays below, you get out. And then you don't have to be in this mess. I don't care if it's Walmart. So the bottom line is, yes, it's in the doghouse, but technically it's been in the doghouse for a while. And then if you use a little Warren Buffett and say, okay, what does my wife, what does my husband, what do my parents do around holiday times? I know my wife doesn't step in the store anymore. They get the little brown boxes. Where are they from? Amazon. Because everyone orders online. So maybe this should be higher, right? And that's what Amazon's been. Amazon's been a runaway train. Oh, what a quinky dink. Look where the 200-day moving average is. All the way down here. Not above it. Oh, look at this. For momentum, took out the prior high, held the gap, and now it's above the 8-day moving average, which means it's very strong. You don't short that, you buy that. We had a few different pivots. You had a pivot to buy right here. Then it came in, tested the 8-day right there, and now you're at new highs. So, if you follow trends and you have a set of rules, you stay away from a Walmart, a Macy's, a Target, whatever, and, and Amazon has been, the place to be. But, you can't have an overall strong market when the leadership is so narrow, and that's what's been going on, and that's why you have to be a bit skeptical because, there is only a select few of stocks that are acting very well, and even sectors. So let me just go through one or two more sectors before we get into more stocks. You have the Russell, which played a little catch-up, which we were talking about right around here, that now looks pretty vulnerable where it's engulfing this upper range and it's getting rid of the 8-day, so that means it could go lower. So from this gap, this I would say is your active support. So somewhere around here, it's going to be pretty important to see if this could hold. So we'll be watching this 116-ish area. If we can get into here, maybe we get a tactical little buy, but at this point, it's losing some momentum. It came right back into this old resistance and got rejected for now. But it also has come a long way, so we'll see how it reacts here around this 115.90. The BIOS, not giving much help either. It too just engulfed this small little range. Here was your quick move higher that couldn't hold back below the 200-day. And now some might say this is a little bit of a head and shoulders top formation on an active basis where you have the left shoulder, the head, the right shoulder, with your neckline being right here. So if this were to break and close below, that's about 323. The measured move from 340 to 323, 17 points. That could take you at least down to right around here, which would be a basic headwind for the overall market. So at this point, it's hard to say that you could just buy a shallow dip after the size of the move we had from those that September double bottom. So if you're trying to stick with strong stocks, there's only a few of them. Okay, I showed you Amazon before, Google, pretty good. Also following the trend, and I know it's a thick, big stock. But look at that big gap after earnings. You could have bought right after the earnings when it held the gap, and you had a nice little trailer, or you could have tactically maneuvered it maybe when it broke above the earnings day high and then retested it here, and now look where it is. Above the 8-day moving average. If you're scared to buy it, doesn't mean it's a short. Shorts don't happen above the 8-day moving average. Anyway, it still looks good. Netflix has been acting better. Okay, ever since earnings, it kind of repaired itself. It was in the doghouse. Okay, and then if you remember in the morning call, I actually showed you this little small lower pivot, traded above this, then it filled the gap. So it showed you that gap no longer had power, filled it, and then retested it, and now it's going sideways again. So I think this is in the stronger camp and in the game for a potential another trade. I tried being long it yesterday myself until at the end of the day I just pretty much got flat most things. So here's a look, the chart the way it looks. So if this could hold above, just say 111.41 for a little bit, perhaps we'll get a nice little buyable momentum spot when the market wants to bounce through this 116. So this is now above all the moving averages, not below them. So it's in the game from the stronger camp. So earlier this week, Apple we lost it as far as a constructive acting stock. After earnings, we had a nice swing trade from like 118, 119. Everyone in the VTF saw me sell it at 123. I guess it was kind of lucky. And then I wasn't long it the day that I think it was CS First Boston said that they reduced their their parts that they ordered from overseas by 10%, so that hit the stock. Lo and behold, Apple now has a very big hole in it. Okay, we don't like holes in charts, especially if you're a bull, because typically, when you have an open gap like this, anyone that bought it in here, it was on sale when it gapped lower, but nobody took the sale. That means it's weak and it still has an open gap. Hasn't fallen apart, but the longer it stays below this unopened gap, okay, the weaker it could be perceived. So at this point, let's watch it. They tried to do a small red dog reversal yesterday at 116, went up, couldn't hold it. So maybe with time, all of a sudden they come out and say that that report is frivolous, that their next quarter looks great, et cetera, then maybe we get a trade to fill this gap. But the longer it stays open, the more it stays in the penalty box and you do less. Remember the gap after earnings, okay? Here was that gap after earnings right here, okay? It never filled it, and what did it lead to? It led to a big break right here and a lot lower prices. So unfilled gaps in one direction usually is the winning direction, and right now you have an unfilled gap here, so we'll see what happens next, okay? So that's important. It goes with the fact that the less leaders we have and the less things we can trade, the harder it is for markets to go up. As far as other names like in social media, we had tactically, even if you're not have broad-based risk on, there are great trades out there, and Facebook happened to be one that we targeted and worked out really well. Okay, coming into this day right here, if you look on my Twitter feed, I was like, oh, the stock has been unbelievable, right? It gave you a nice little trade above the descending channel here, a nice trade up with the red dog reversal right there. 3 days down into a prior high. Let's look at it to see if we could buy this 106 area, okay? And that was only a few days ago, and then pow. So right there, that's a nice trade. You can make your entire month targeting a trade like that, or at least week, right? What did it do? It traded below the prior low. What's the red dog reversal strategy? It gets below 105.86, went to 105.24, so about 60 cents worth of risk, and then reversed higher, okay, and closed 107.91. So $2 for 60 cents risk, and then if you held half of it overnight or a third, it was up 60 cents yesterday, traded around, but ultimately still looks good, building a whole nother level here. So, try and continue to buy this on weakness. If the market needs leaders, I have a feeling this will show it flex its muscles, and that 110.65 won't be the high. But look above the 8-day moving average. That shows strength. Okay, you can even hit the 21-day and still show strength. So, acting very well. LinkedIn is acting okay, a little wishy-washy. I would just be careful. It had a big move. LinkedIn sometimes is tricky to trade. We pointed out here when it broke above this 198, it did hold the earnings gap and gave you another little nice trade. But at this point, you have a small ascending channel here. If you're long it, I would put a stop in at 247. And if you're looking for a cute short, a close below 247, ish, right around here, and it could retrace down. Thank goodness, Twitter, we just stopped trading it. Ever since that earnings shenanigans mess, I got away from it, and rightly so. I talked about if it breaks the 50-day, then and you're not done with it, you got to get out of the way. And that was right around 28, and now it's down here, and there's really nothing going on in Twitter. Here is your, I guess the lower it goes, the higher the percentage that someone might turn out and say, oh, it's going to be bought and it has a bounce, but you can't trade based on that. It looked decent into this spot before earnings, and now, boom, held the bottom half of this channel, and now it's just dribbling lower. I would not overtrade that. As far as we talked about oil and how it could be a headwind. The market liked oil between 44 and 49, and now, it's at 42 and change below 44. The USO also broke below the channel that we were talking about. So, in the channel, it's a non-event. Kind of below this channel, it turns into somewhat of a headwind. So now this is your last point of reference here. This is 1380, what is this? No, 1361 starts getting below that, and you're going back into the bottom end of the range, which will not be good for the overall market. XLE also, I think some guys got stopped out yesterday. It's giving you a few good trades. This was one, and then it came in, reversed, gave you another nice trade, and then now it's been trickling lower and kind of broke this mid area yesterday. So now I guess it has to hold somewhere around here, maybe for a trade. So right down the pivot. 67, 61, maybe it breaks below, comes back above. Remember this day it broke it below this range, and then it reversed and went higher. So maybe we get some kind of trade like that today or tomorrow or Monday, where it puts in false breakdown and goes. So if it does that here, that would be helpful to the market. But I would just use that pivot. So all in all, I think there are tactical things to do. We're in this time frame where the market's trying to figure out after a 12 to 13% move what type of pullback we could have. That fast, furious, active trend has been broken, so that means reduce some risk, pick your spots more carefully, make sure whatever stocks you're playing, make sure they're in the game. If you're playing them for strength, that means above the 821-day moving average. If you're trying to find a very extremely oversold stock, do not try and catch a falling knife. Perhaps use the red dog reversal strategy where at least it's calculated for some type of cash flow. And it's only mid-November. This is the week or two before Thanksgiving. Could be choppy. Maybe do less. This could be the less is more type of time frame. But if you focus, there are definitely some calculated scenarios where you could make a few shekels, so to speak, and move on. At this point, for me, I'm flat. I'm going to see if this support active area holds around 207 in the spiders. If it doesn't, we'll see where it goes next, and we'll see if if leaders can still act well or if they start to play downside catch up, and we'll watch those with the levels we just went over. So have a great day trading. I'll see you on the VTF, or I'll see you at the recap.